Hello to all our viewers watching us on Money Control. I'm Ridhima Bhatnagar. You're watching Ideas for Profit. Today we'll talk about real estate stocks. We'll talk about the pros and cons of Macrotech, which was formerly known as the Lodha Group, as its IPO is coming up. So the question that we're asking today is, does Macrotech really provide a good value? Now, Macrotech Developers, as we said, formerly was known as Lodha Developers, is coming out with an IPO. Backed by a very large pool of surplus assets and quality of earnings, the Mumbai-based real estate player has now cleaned its balance sheet, aiming to create a good long-term value for the shareholders. Formed in 1986, Macrotech has varied product offerings in affordable, mid-housing, high-end luxury residential projects. It has also expanded its presence in the commercial as well as in the retail space, and has recently ventured into development of industrial parks in the Palava region, which is in close proximity to Jawaharlal Nehru Port. This is in Mumbai. Now, at rupees 486 per share, the issues of the upper price band is priced about 12 to 14 times its one-year forward earnings. The company intends to raise rupees 2,500 crores from it. If you talk about the financial position of how the company is doing, Macrotech intends to repay about 2,150 crore of debt through the IPO proceeds. Now, given the cost of debt is around 12%, the company will realize that savings to the tune of rupees 250 to about 260 crores. Now, remember, the company is also aiming to be net debt-free over the period of about 3 to 4 years. The company's profits, remember, dropped from rupees 1,644 crores in the fiscal 2019 to about 739 in the fiscal 2020, and to a loss of about 264 crores in the first 9 months of FY21. But for fiscal year FY22, profits could reach on normalized levels of anywhere between 1,500 to 1,700 crores, more likely due to the reduction in debt as well as lower cost as well. Now, the total valuation of its assets minus the project cost stands at approximately 51,000 crores. Now, this doesn't include the value of the land it holds. Now, post the IPO, its net asset value will stand anywhere over 40 crores, to be exact, 44,370 crores. Now, the company is also expecting a resolution of the UK investment. Construction of those properties is over, and post repayment of bond liability, the company is expecting inflow about 1,500 to 2,000 crores in just a couple of years. So what does the outlook then look as far as the future growth is concerned? Macrotech has strong presence in South Central Mumbai. It has a market share of 34% among the top 5 developers. In Thane and extended eastern suburbs of Kalyan, Dombivli and some others, it has a market share of about 20% among the top 5 developers. The company also is looking to enhance its presence in other micro markets of Mumbai metropolitan region, particularly in the western suburbs from Bandra to Borivali and extended western suburbs, Mira Road to Vasai as well. It is also eyeing the Navi Mumbai region of Airoli to Belapur. Now, but if you talk about the residential segment, the company has developable area of about 63.89 million square feet for the ongoing and planned projects, which is about 90% of the area of projects already completed. Now, in the commercial space, the company has an area of about 9.97 million square feet, which is almost twice the area of the projects which have been completed. Moreover, it has also got ongoing projects for development of industrial park for over 290 acres. The company also has plans for development of 540 acres of industrial park in the future. The present value of all these projects, excluding the development cost as well as debt, now stands at about 42,000 crores as against the 12,400 crore revenues in FY 2020. The projects are executable over the next 7 to 8 years, which indicates visibility for robust double-digit growth for the company. What about the valuation then? There is a lot of value or good margin of safety considering the asset-based valuation. The per share value of these assets needs to be monetized. That works around to be around 44,000 crores, which comes down to rupees 992 a share on the post-issue capital. As against this, the IPO is offered at 486 a share, or a discount of almost 51% to NAV. This is quite attractive considering a huge base of assets which need to be monetized. If you do a peer comparison, considering that Godrej, Oberoi and other premium players are trading at an average PE of about 37 times, the issue is attractively priced. But investors also need to factor in the key risk of promise versus delivery, as it could really upset the market value as well. That's all for today. Thanks for watching.